What is going on, everyone? Welcome back to another webinar. So in this webinar, what I'm going to do is I'm going to break down my trading performance for the month of May. I'm going to give you guys kind of a little rundown on how I do a review, what I look for, and things of that nature. I obviously wish I had obviously a better month so I can show you guys, I guess, the good side of trading. But I think this kind of works out too, because I'm pretty sure more people are struggling in trading than people that are doing well, right? Now after this webinar, also, I'm going to do a Q&A webinar that's going to be on Tuesday. So I posted a link about that. If I did not, I'll post it again after the webinar. So on that webinar, if you guys have any questions related to your May trading month, any, insight that I can maybe give you or whatnot, post that in the Q&A section and I will, try to give my feedback or try to help you out as much as possible on any questions you guys have. So this is my May trading month, right? We're going to dig deeper. We're going to break down some of the trades. We're going to understand it from an emotional level and a technical level. Now, for the year, I am, thank God, still green, right? But overall, my progress has slowed down tremendously, right? So just to give you guys a little rundown of my trading performance for this year, started January off very, very well. You guys can see not a lot of trades, executed very well, uh, carried the momentum into February pretty well. In March, I was out of the country, had some, I guess, family things going on. So I was out of the country. Didn't trade. Even this one trade was out of the country. I took the trade, very stupid. Lost money. That was really about it. And then I came back April trying to build momentum, which I kind of sort of did a little bit. And then we go into May and, kind of go off having my first red month in probably the past 2 years. I don't want to really count this as a red month or a green month, just because if I go to my trading performance for, let's say, the month of May, right? It's really not any sort of trades at all. Like I had two SPX trades, kind of stupid trades, no setups, no realized R multiple, like nothing at all. Just took it to take it because I was out of the country, so I don't even want to count that as a month. So May was kind of a whole month off, right? The reason I'm giving you guys context is because in a year from now, in 6 months from now, or 5 months from now, I want you guys to be able to develop. Sorry, I have a little sore throat. I want you guys to be able to develop and see the progression of trading and how trading actually works, right? Because a lot of people, the way they think about trading is they'll think, oh, I made 276K, I made 136K, I should make 400K. And, that's not how it worked, or at least that's not how it worked for me. For me, in the past 9 years, my trading has never been linear. And for a majority of, consistently profitable traders, I've also realized their trading is not linear. What I mean by that is they'll have a 200K month, 400K month. Some months they'll be up like 40K, 50K. They'll have like a small red or a flat month. And these are months they need to stay alive. Now, in my opinion, I think May was a good trading opportunity month, right? I was just not able to capitalize on it to its full aspect. And now there's many different reasons for that. And like I said, I'm going to dive into the emotional part and the psychological part of that too, and how it impacts trading. And then also the technical aspect, right? Now, going through these trades and going through what has happened, right? We're gonna start off from April 1st, right? We're gonna look into April and see what happened. So April, you guys can see, didn't take a lot of trades. Let me just go to the calendar. It's a little bit easier, I feel like, right? April, pretty green, right? Now, the only problem I had with April was I wasn't consistent, right? I was moving around a lot. I wasn't in one spot. So I wasn't consistently in front of my computer and taking positions. And I focused too much on April on trying to be green and walking out on the day on being green. Why? Because the last day I traded technically was February 18. And that's me talking about day trading, right? Waking up, having a game plan, executing on that game plan. So when you go from April 18th to April 8th, you're going into like 6 weeks or 5 weeks of no trading at all or no understanding of the market. So obviously I'm trying to build that momentum back. And that's where April kind of kicked in. I walked out having a green month. I think I traded very efficiently. My problems in April where I was not executing on a high level, meaning I wasn't maximizing my trades. Like there's days like this, I could have had a much, much better day. Right. I could have maybe let this trade ride out a little bit better, made maybe 20-30% more. So even when we go to this trade, like for example, let's look at this, right? Just to give you guys some context. Friday, April 8th, I played SPX puts, right? So just to give you guys context, I got into the 4480 puts. I had a size of 20 contracts, right? I got in a 940, and about a minute later, not even a whole minute, I got out, right? And look at the trade, guys. If I held this trade for a little bit more, these SPX contracts went to like 20, 25 bucks or something. And look how it dumped. So my whole April was taking a little bit green, taking a little bit green. But if I fully maximized this trade and I followed my game plan, you guys can see I would have made probably a lot more money. But I wasn't able to hold through those trades. And that was because I didn't trade for a little bit. And I just came back mentally like, oh, I just got to be green. I can't have a red month. I can't have a red month. And, I obviously spoke that into existence, right? After that happened, we start off May. And just to kind of give you context to May, we start off May pretty strong, right? Have the first day $3,000. Next day didn't really trade. Negative $2,000, lost $4. Went into Friday and I had a big losing day. So that's what I'm going to talk about now, right? So let's go through my trades from the beginning of May, right? So I'm going to go through some of the trades and some of the days and then just kind of break things down from that perspective, right? So I want to start off with the first day, which is May 2nd. So on May 2nd, I took my first trade, Amazon puts, right? Let's just go through that right here so we can slide. Here we go, right? So I took my trade on Amazon puts, and this trade was a little bit sloppy, right? Now, what I mean by sloppy is what I base my trades off is I base my trades on R multiple basis. How was my R multiple? What risk did I put out? How much capital did I allocate? What setups did I have? And things of that nature, right? So the moment I look at this trade, right, I made about 2,300, had about not even a 1R. My setup on this was a morning top reversal, which realistically didn't apply, right? And I try to tag all my trades to understand what setups I had and what game plan I was playing, but this was not even really the setup. That's the setup I thought there was, but it wasn't, because the morning top reversal for me. And also another thing, we're gonna have a boot camp. I'll give you guys the dates now. The team's gonna announce it tomorrow. Hold on, let me just give you guys the dates. I think April 18th and 19th. Right. So we're going to have a boot camp going over some setups, and I'll go over some of my setups, what the criterias are. But besides that, that was my setup in this trade. And then when I go back to the trade, I'm like, okay, I played the downside. I played puts. You guys can see this is the puts I played, but there was no real trade, right? There was a rejection here, but no real trade. R multiple didn't really make sense. My trade setup didn't really make sense. And, picking this up early on is very important. So, when that happened right away, I kind of understood like, hey, I didn't have a setup on this day, right? Even though I made money, I didn't technically have a setup or allow myself to have the setup that I feel like I should have had. But however, we go to the second trade, I go out making another 0.5 RR on the trade. And when we look at this trade, you guys can see I put it downside again, scalped this, no real good setup. And I want to be very honest and transparent with that. These minute candle plays that, sometimes we play and we go back to, and I do this a lot. I'll go back and I'll look at them and I'll say, wait, there's no real setup there, right? Okay, I made money. Great. I'm green. But was there an actual setup? In realism, not really, right? In realism, I'm trading chop. And the thing with that I realized over the X amount of years is when you start trading chop, guys, and you are green, that is a double-edged sword, because when you're green, a lot of times like, okay, I'm green. I started the month off strong. I started the week off strong. And then that can put you into taking on continuously bad trades. So that was the first day of the month, right? After the first day of the month, right, we go into the next day. We're like, okay, that was the first day. And then the next day. Next day, I start off very strong, make $1,500. Once again, not the best R multiple. And then right after that, you guys can see, lose about 12% or 2R on the trade. And then I make about 1R on the trade again. So overall, red on the day, because my size on this was a little bit too big, right? And then I walk out, obviously being up $1,500 on the day to being down $4,000 on the day at one point to closing the day at negative $2,400. And then I'm going to go through those trades too. And then the next day, start off the day strong and then give it back and then make a little bit and I'm done, right? And I want you to notice the pattern here in terms of timing, right? The timing here, and a lot of my trades, guys, right? and I've said this before, I'm trying to trade on the open the first hour, hour and a half, and I'm trying to be done. Right. So when my first trades come at 2 p.m. or midday, right, those right off the bat are very terrible trades because I'm taking these trades, and when I go in deeper, right, and this is what I want you guys to be able to recognize in your trading is to go deeper in why certain trades are taken. I remember this day I wasn't trading the open. I had some things going on, so I was like, you know what, I will trade after 12. Now that's a rule that I tell myself: if I can't trade the open, if I can't trade the first hour or two, don't even trade on the day. I don't care if I made money, but most of the time these habits compound and they start messing you up overall. So after taking this first trade, right, and you guys can see at 2 p.m., right, and let's just kind of look at this trade, right? You take this trade, and this happened also, if you guys remember when the Fed's, the FOMC meeting happened, right after the meeting, like 2 minutes after, I tried to play a put. You guys can see, obviously, if I held puts, I would have made a lot of money on that trade. But when I go back to the trade and I see green, and I'm like, okay, Umar, let's be honest here. Was there a setup? No. All I saw is I saw action, the price action going up. I was like, okay, most of the time Feds have their meeting. You see a huge movement in price action. That'll be like a huge quick pump, and then we'll start seeing a dump, right? Now, the way I trade, right? I don't know how other people trade or how you guys take on trades like that. I don't like taking those trades. That's not my way of trading. That's not what I want to trade off. That I don't think it's consistent. It's very hard to predict. It's very hard to have an edge, right? Now, when I look at this trade, if I did hold this position, right, this position would have made me a lot of money. But in realism, I had no setup here, right? No setup at all. Took this trade and obviously, made money, but no way near as what I anticipated my stop to be and how I wanted to play. And also this trade, if it kept going up and if it kept moving the way it was, I would have probably lost 5 to 10 grand on this trade because of how crazy premiums moved. So I wouldn't have gotten out at 45. And once again, that's me being honest with my trading and saying, hey, listen, this was not a smart day. I should not have traded at all. It was the FOMC meeting. It was that Wednesday of May. I should have just taken the day off. Right now, obviously when that happens and you go on to, let's say, the next trade, right? What happens in the next trade? And now this is what I'm talking about, carrying over from trade 1 to 2, right? To pay attention to this real quick. So right here, I shorted, right? It was literally like a minute, not even 30 seconds, right? So I shorted right here on the same candle. I got out. I made $1,400, right? From one angle, great. Another angle, terrible trade. Now, because I made money on this trade, right? Right away, I sold early. Now that mental FOMO kicks in, like, ah, shit, I should have held this trade. I should have played this trade outright. As I held this trade and played this trade outright, I could have made a lot more money, right? Now, where do you think that carries over to, right? That automatically carries over to the next trade. Same exact trade, Amazon trade. We dumped, we find a bottom, we start bouncing, we start rejecting again. And because I'm so attached to this trade of me missing this, what do you think I do right here? Right here, I go around 2:22 p.m. Eastern time. I start buying puts, right? You guys can see I start buying puts. I have about 10 contracts around $42. I'm buying puts right here, making an assumption that we're going to keep going down. There is no setup. And the setup that I'm playing right now is low of the day. Oh my God, and what's happening? I'm getting trapped. Early entry, and I got trapped, right? And I gave away $5,500 with obviously making an attempt that, I'm only going to lose 1,700, and right away destroying the whole day off one single trade. And that trade came off this prior experience, right? And then even after that, when we go to next trade, great, I made money on this trade. But in realism, right, and this is what I'm saying, made a quick scalp, made about $1,600, but was it a really good trade? Absolutely not, right? Not at all, right? And it's not a good trade at all because these are old trades followed, by one bad day or one bad chase, which was, hey, you get the first high, right? And I'm pretty sure a lot of you guys have this, pattern. And this pattern for me in the month of May happened a lot. I would get a little bit of the high or whatever you want to call it, a taste of a trade that I felt was good, but obviously wasn't. And then I replicate it again and I lose money, right? I replicate it again. Okay, I made money. But in realism, I'm still red, right? We go here, same exact thing. I did the same thing here, right? We go to 10:42 a.m. I take my first trade on Amazon, make about a 1 hour on the trade. Right now, even on this trade, if you take a look, we're in a huge downtrend sell-off. I missed this whole trade because of the day prior, and I'm like, oh man, I'm starting the month off slow. As I'm starting the month off slow, I'm not able to really capitalize on any of these movements. So what play do I play? I play a quick bounce, right, or a reversal play around 10:42 a.m. I'm like, I'm gonna see any sort of hold, which I saw, and I'm gonna play a quick scalp. Great. I played a quick scalp, 1 hour trade, nothing fantastic, right? I also kicked in as a boredom trade because now I felt the need to trade. And you guys got to keep this trigger in mind too. Very important. When you guys see massive moves happen, and this is a problem that I've always had and I still have. When I have a massive move that I missed, now I sit in front of my computer and I start hunting for a play, right? And the way I've combated that is I just don't trade for the day. So sometimes when I don't have a trade, that's the reason, right? Because when I miss these big plays, I'm like, oh shit, that was going to be a big day for me. I could have done so well, and I missed it. I wasn't able to execute. I start looking for further plays. So here, what I did was I looked for the next play, and okay, I made money on it. But once again, boredom trade. Really hard for you to read this edge on something that's really accelerating on the downside. Trying to find a bounce on that as a scalp is really, really hard, right? It's not easy. Like now I'm just making my trading a little bit more complicated than it needs to be, right? So right away, I go in and I start taking that trade. I go in, I buy calls, and I try to play this quick scalp towards the upside. Once again, made money, but not impressive, right? Now, on that day, the second trade, right? Because of that whole move missed down. Now look at the second trade, guys. I play calls again, right? Now remember, I played calls on the first play, right? After playing calls on the first play, I start thinking, okay, we bottomed around here. I caught the quick scalp. We bottomed, made a higher low. We're going to start breaking out towards the upside with no real signs of that happening. But because I missed the big move on the downside, I'm trying to capitalize on a reversal play, right? So once again, go for a reversal play, mistakes, early entry, boredom trade, and I buy calls, right? Right here. And then I obviously exit. Thank God I didn't hold through. And I gave myself, a terrible trade and red on the day because of a followed trade, right? And what I'm trying to explain here is a lot of times, right, catching on to this is more important than anything else. And the reason for that is what happens is we get a good trade in the open. And there's a lot of times, like I've had days, and I say this all the time. I've had days where I'll make 30 grand on the open or 40 grand on the open, and I'll be like, shit, like a part of me got lucky on that. Like there's a small part that got lucky on that because it was a bad trade. And I'll walk out on the day because I'm like, because I've taken a bad trade that worked in my favor, that high will now continue into the next trade. And most of the time, I will give it back. Right. And that's what happened here. I made money, terrible trade. And as you guys saw, followed through with the second trade and gave it back. And then now I'm just trading to trade, right? Okay, I made $135, like messes up my stats, messes everything up. There's no real, ideology in this trade. And, even if you look at this trade, I'm trying to play calls again, right? And look at this trade again, right? I played calls right here, right? At 11:04. 11:06, I got out. Imagine I didn't get out. I would have lost. I would have been way more red on the day. There was no trade set up here, and I'm playing a reversal. Like there's no reversal here. There's no play here. This is where I need to be cash. I need to go cash on the day and be like, I'm done. Right now, once again, terrible trading day, right? Now see how it spills over to the next day, right? We go on to Thursday, May 5th. And after we go to Thursday, May 5th, now this is where things get really, really nasty, right? I go into the next day. And now I'm kind of walking you guys through like the whole ideology of, what happens when you take one bad trade, spills over to the next day or the next trade, and how it becomes a domino effect, right? I go into the next day, and my next day, I walk out having my biggest loss for the day or a trade for the year, 21 grand. I have not had a 21 grand loss on a trade for the whole year. I have not had a 16K red day for the whole year. Like this is by far so far my worst trading day for 2022, right? Now, obviously, to one aspect, people are going to compare it, and this is the wrong thing to do. I want to be very clear on that too, right? People will compare and say, oh, well, 16K is your worst day. You've had a day where you made 100K, right? Yes and no, because my risk tolerance and my trading performance here is a lot different than when I was trading here. Now, if I traded like this on the days I was making 100 grand and 60 grand and yada, 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 this would not be a 16K loss. This would maybe be a 30 or 40K loss, if I'm being honest, right? Because the way I'm trading at that time with the size and the positions are a lot different, right? Where now the size is cut down. I'm having a negative 5R trade. I'm having a negative 34% trade, negative 44% trade, followed by that. Like, imagine this, right? With my 100K position, a 200K position, I'm down 60K on the day. So this is, by no means, I'm like, no one should say, well, oh, it's still good based on, no, my risk management, my size has decreased in the month of May because my trading has not been well. But if I put them hand in hand together, this is like, it's terrible, right? So I don't, even for your own trading guys, don't do that. Don't say, well, I've been trading this month and my biggest loss this month is $500, but my biggest gain in January was $5,000. Yes, but that was January. You were trading maybe different market conditions. You were trading different size, your confidence level, your flow of trading, everything was different. Now it's not the same for you. So you need to play in context to now and be aware of that, right? So now this was a very, very interesting day, right? So look, I traded the open and, I have a rule, right? And I didn't follow that rule this day, right? And my rule is a lot of times if I trade the open, and you'll see in like my good trading days, if I go to January and whatnot, when I have good opening trades or a good open trade, I do not trade again, right? I don't take a trade again until 10 a.m. And like you guys hear me say 10 a.m., 10 a.m. I wait for 10 a.m. Why? Just some educational stuff. Around 10 a.m., we start seeing, some institutions step in. At 10 a.m., sometimes we get some economic reports. Around 10 a.m., new money inflows or outflows from the market some days, not every day, right? So positions start getting taken on that first 30-minute endpoint. So I start waiting to see directional movement. And also for me, when I trade well or bad on the open, I give myself that little break. And that's worked out for me, right? So I see people, they'll take a trade at 9:35. They'll take a trade at 9:42. Like they'll take back to back trades, and it works for them great. For me, I know when I take 1 or 2 good trades, most of the time it spills over to my next trades. Something I need to work on for this year, right, to get myself to the next level. But I have that problem, so I give myself a stop until 10 a.m. Right now, if this day I followed that rule, realistically, maybe these 2 trades would have been done. I would have maybe had a 9K day, and now because I have a 9K day, doesn't mean that, oh, I'm not red for the day or whatnot. It just doesn't destroy my confidence for the next few weeks and upcoming days, because trading is just not things that we see on the screen. It's not just numbers. It's not things we see on paper. There's also a psychological effect that losses have on you, besides being down 16 grand for the day, right? And besides just being down 16 grand for the day, in all honesty, being up 7-8K and then losing 16K, I'm not down 16K. I'm down more like 24 grand or whatever it is, right? I'm down 24 grand for the day because I made this money. This money was made. I give it back by taking these trades. So one person is going to look at it as, well, I was 16K red for the day. No, I lost 24 grand. My P&L or my account should have been up 24 grand for this day. But instead, I give 24 grand back because I made this money. This was realized profits. Right. So we need to like hold ourselves accountable for that, because I see traders, like I used to do that too. Like, I'm down 16 grand for the day. No, Omar, you're not down. You gave up 24 grand, not 16 on realized profits. You see 16, but I made 8 grand already on the open. Right. So that rule has saved me a lot of money and has saved me from taking terrible trades, and also kind of prevented me from taking good trades. But in the long run, it's allowed me to be profitable. So I didn't do that this day. Right now, I'm excited to go through this day and kind of show you guys the ins and outs, right? So I start the day, first trade for the day. This is where things got really, really exciting and great. So my game plan for the day was to see any sort of reject on the open. Morning top reversal. The way I play morning top reversals, if we get a quick move towards the upside in the morning on the first 2, 3, 4, 5 minutes, we start seeing a heavy rejection, I will short. Right. So my level for this day on Amazon was at 23.20. We rallied right into 23.17. And on the next candle, we saw heavy reversal right at 9.32. 9.34 is where I go, right? And I take my first trade. I go to 9.34 and I take my first trade. Now, a lot of things happened wrong with this trade, by the way, which I want to talk about. So I got the right setup, right? Great setup. My setup was phenomenal. I quote unquote read the setup very well. Now, I didn't execute on it well for two reasons, right? One, my entry was late. My entry should have been either on this candle where I got the perfect confirmation or at 9.33. I got my entry at 9.34, right? Now, that's a big, terrible move on my setup, because my setup is supposed to allow me to get in somewhere here or maybe in the next candle and ride a little bit down, or maybe even on the rejection of this candle, either or. So I didn't get that good fill, right? I got a late entry. Second, I had a bad strike selection. So this is something that's very important. So when you guys trade same day expiration, and this was on a Friday, so I was trading same day expiration, you guys can see Amazon stock price is around 2,300. I'm trading 2240 puts. This was my mistake because I thought it was at the 2280 puts. Now the problem with these types of moves are when, and once again, this is very important because you're going to see the follow-up trades, right? When you start selecting way out of the money calls or puts or anything for option traders, what happens is when these plays go against you, they don't start moving, especially in the same day expiration. Like, yes, if this Amazon this day dumped to close to 2240 or 2250, I would have really gotten paid. But let's look at the risk parameters. When Amazon starts going the opposite way or starts moving in that direction, premiums don't move as well, right? If I traded, let's say the 2300s or 2280s, this could have been a 60-70% trade. That's the number one. Number two, if I got in earlier, which was my game plan, could have been a higher percentage play. Forget it being a higher percentage play. It offsets my risk by a lot. Third thing I did was I had a bad fill. Now, I know you guys understand how options work and how premiums move. So I remember I started chasing this fill. I was supposed to get, or I was trying to get filled close to 10.20 on this contract. I got filled about $1.40 more, right? And this is me trying to chase the fill from like $8. Like I remember the option contracts were like at $8 at one point. So I start chasing them. And now I start getting filled at a very bad point. And obviously I still made money on the trade, but overall not the best trade, because look at my risk, $5,300 about 1.45 R, where this should have been a 4.5 R trade, right? So right off the day, terrible trade. Shouldn't have taken the trade after this. And you know, the crazy part is after I took this trade, I processed that. I was like, I don't think that was such a good trade. And I was quickly, and because I've been trading for a long time, in some situation, I'm quickly able to recognize my problems, right? And recognizing your problems as a trader is one part, right? But executing on them and fixing them is obviously a second part. So I recognize, I'm like, I selected the wrong strike. You know, I shouldn't have, well, like I picked that up very quick, right? And I told myself, I was like, I should call it a day. Don't just walk out. You're green. You know, you had a good day, 7K. Don't try to go big. And now what led to that is because I was already at 7K. The day prior on Thursday, I remember I did a webinar and I was talking about trying to quote unquote have a 5-figure day, not a first 5-figure day, but I haven't had a 5-figure day since February 18th. So that's been anchored in my mind. So I go and I take a second trade. Right now, let's look at the second trade real quick. I buy puts, right, at 1540. I sell at 1570. I make $200, like legit a stupid trade. I go right here at 943. I buy puts at 944. I sell right away. Obviously, if I held a little bit more, I would have made a little bit more money, but there was no setup. And now I have a FOMO trade. My FOMO trade is, oh my God, I could have made so much on that trade. I could have had my 5-figure day. I didn't do it. I screwed up. Oh my God, I can't execute. Oh shit. You know what? If I get 1 or 2 more trades, 2K, 3K, I hit the 5-figure day and I break that barrier and I'm good and I'm done. Right away. You think like that any trading day, guys? I promise you, just walk away. And I've seen that happen with myself so many times. Like the days I'm like, oh my God, I'm almost like, there was a day, right? I was at like, I think 92, 94 grand. And I was like, oh shit, I'm like 6 grand away from 100. Let me go and let me try to make 100. And I ended the day up like 64 grand, right? Just because I started chasing that extra, amount to hit the 100K day. And I was like, oh shit, right? And that happens because we start taking trades to make money instead of taking trades that have a high probability. So this trade happens and I'm green, right? And there's a problem with green. And this is me talking from my end, and I'm pretty sure people can relate. When I'm green, I'm pretty sure you guys get that too. You get a high, right? You get a weird high where you're like, oh man, I'm green. I made $200. Even if it's $50, green is green. Like it just triggers something in your brain, right? So now I had one green trade. I'm making almost $8 grand. Then I have another green trade. And now they're not just green trades. They're like, wow, I had a great setup. I even called this. This would have been a good setup. So now you think you're really good at what you're doing, right? And so that builds up extremely bad habits or false confidence, which goes into my trade that crumbled everything, right? So first trade here, second trade here. Now mentally you're 2 for 2. Mentally you call that 2 great trades, and you're like, wow, I'm so good at what I'm doing. I'm gonna catch this continuation bottom. Now you're thinking with tilt. So here, low of the day. I'm like, I'm gonna play the low of the day. We're gonna keep breaking 2260s. We're gonna keep dumping. We're gonna go lower and lower and lower and lower, right? So I go right here, and I'm going to go and play this all the way down. I start buying contracts at 21.95, 21.95, 21.85. And look, my size increases too. I'm at 20 contracts. 4 minutes later, I average down. And this right here is the number one thing that I always tell people. On positions, don't ever average down, guys. Like never, ever, 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 ever average down on a losing position, right? When I say that, a lot of people, well, everyone averages down. No, the people that average down are long-term investors, right? There's cost average, whatever, when they're buying long-term stocks over and over. That's a lot different than when you're trading options, right? Because when you buy something at $21 a contract and it goes to 7, mentally you're like, wow, it's at 7. That's so much cheaper. If I buy at 7, it goes to 21. I make it. No, don't. Like that's the worst thinking. You think like that, get out of your position and shut your computer, right? So one first big thing is I average down at 10.02. Now when we go to 10.02, right, we start seeing why I'm buying more. We start understanding that, right? I look at this, I buy right at the bottom, legit at the bottom. I'm buying puts right at the bottom, right? We start moving up, and instead of saying, oh, we're moving up, go cash, revisit your position in 15, 20 minutes. And maybe if I did that, I would have maybe lost, let's just say 5,000, right? Maybe 3,000, maybe 6,000, maybe 9,000, whatever, right? I don't do that. Right when we go bounce a little bit and we push down at 10.02, I'm like, okay, we're gonna dump. We're gonna dump. So I add 10 more. Now, the good thing I did that I was happy here after we started making a little bit move down, I was able to recognize this and say, you know what? Even if we dump going with 20 contracts, do not increase size. You're not in a position or you're not capable enough to increase size right now. So take off size. I don't care about this being green. I don't care about being profitable here. I just want to take size off. So I took this size off. This right here, by the way, saved me a ton, even though, sorry, even though I was really red for the day, right? If you just look at this, I sold 10 contracts at 18 and my final exit was at 11. That's a 7-point move. This would have been another 7 grand. This would have been $30,000 for the day. But because I was able to recognize that, hey, my size is too big, let me scale out, let me get out, I got out, right? That's the only thing I can say about this trade that I did well, that I was able to quickly recognize that. And guys, recognizing things you did well as a trader are also very important, because when you recognize what you did well, you want to keep building on that, right? A lot of times we focus on problems. Oh, I suck at this. I suck at that. I need to improve this. I need to improve that. But reinforcing the things that you are doing well and building on that reinforcement just allows you in the long run to keep doing those things. So the fact that I scaled that and I was able to recognize that my size 30 contracts, if this goes against me, I'm screwed, was big, right? Now, when you look at this 10.02 at $18, and then right when we start reversing, I'm like, you know what? Let me get out. And look where I got out, dumped. And now I'm like mentally FOMO'd even more, right? I'm like, oh my God, I got out at 2,300. I should have shorted. Like, you just start creating these crazy scenarios, and a trade I lost 21 grand on, right? Like a massive, massive loss, which could have been or should have maybe been a 30K loss if I kept that size. Now, this trade was preventable. You guys can see no setups. I'm playing the low of the day. Like what? Like that's not continuously profitable. Low of the day. Imagine just trading and saying every time the stock is about to hit a new low of the day, go short. Like it's not going to make you money long run. It doesn't work. This market is not going to favor that, right? And that's where traps are going to happen. Market makers know that. Market makers are going to start trapping people in. They're going to start making tons of money on you, including me. Like that's what happened. Market makers trapped me in here. And I'm pretty sure a lot of you guys have gotten trapped in situations like that yourself, right? So look, 21 grand. Now this is where I go on a complete tilt trade, right? 21 grand. I go to this trade, and this was even worse. We reject, we push down, no confirmation. Look, we're making higher lows, right? What do? I buy puts. I buy 4. Why did I buy 4? I say, you know what? If I buy 4 and look at, just process this thinking, right? I'm like, I'll buy 4. I won't get heavy. If Amazon does dump and has a 100-point move down, this 7K could make me 20K and I'll maybe be flat for the day. I'll ride this out till the end. My mentality here was to ride this 7K till the close of the day. Like just hold it. Imagine I held this the whole day. This 7 grand would have been burned. I still lost 44% on this trade for no reason. And because I sized down, right, from, having 30 contracts and 20 contracts, I was like, I don't really care. It's just 7 grand. And you know what that leads into? That leads into tilt trade. You're on a tilt, right? Because the number here, it becomes smaller than your last trade. You're like, it's fine. And that causes you to lose tons of money. And then you go to, my next trade, no setup. Like I have no setup. And that's like the destruction of like a terrible red deal. Look at that, losing 50%. And here I cut it because I was like, I need to stop trading like this. I need to cut it out and just end my day and just not have any open positions. Right. So that's the big red day that automatically when we go into our performance for the month, we start looking at, how we have been trading and what we've been doing. We start understanding like, hey, what was that point in my trading that caused me to have the big drawdown? And that was the thing. I was up about $700 on the 5th and right away down 15 grand, right? Go up, being up 11 grand, down 15 grand, go up 12 grand, 15 grand, and then boom, 26 grand, pick up a little bit and then boom again. And then when you look at these patterns, right, and you start understanding like, hey, what patterns am I having here, right? I have this big losing day. I follow it by, a solid day. I make 4 grand, but not the best trading, right? Because when I go through these trades, I did not have, in my opinion, my trades were too quick. Like this trade, my entry was a little bit late. Look, same exact thing, blowing top. We get the first move to the open. We get the rejection. You short it, get a quick scalp, and maybe add on the second rejection at 2080. It didn't do that. I was too stuck on seeing green and taking green as quickly as possible because now I want to dig myself out of the hole, right? Of hey, I lost 16 grand in the last trading day, and that's just leading me into taking multiple positions. Here's another trade, right? I buy puts right here, right? As I buy puts, I start selling way too early. Don't follow it. We get the morning top reversal, right? Mistakes, late entry, bad strike selection. That was another thing, by the way. My strike selection on some trades have been terrible this month, right? Because I'm scalping, guys. I'm not playing 10, 20-minute moves. I want to be more at the money or in the money, right? 2250 puts while we're around 2074. We're $20 away. I really need to start moving into that direction heavy to get paid. If not, my premiums don't really move as well, especially if the trade goes against me. So it's just taking trades where, hey, I'm actually, doing well on this, or I'm actually leveraging. Like for example, when this trade bounced up a little bit, guys, I was down $4,300 at one point, and I walked out making $1,000. Like terrible trading, right? Like just not a good trading day. And that's the thing with me, right? When I have some trading days, I will tell myself like, yo, I did a terrible job. This was not a good trading. I don't care about it. Like this stuff means nothing, right? These numbers mean nothing. It matters what went into those numbers. And I know it sounds very cliche, but I'm telling you, like, how did I execute that trade? What mistakes did I make? What risk did I put out? Did I execute these trades well? Did I have a setup? Did I not have a setup? Like all these things really, really matter, right? Because if I can't fix that or understand that or acknowledge that and execute on that, my mistakes and issues will bleed into the next day or next trade. Now, terrible trading day, same thing on Thursday. I go into Friday. I start the day off, right? Look at this. Terrible trading day. Look, so I'm playing high of the day now. Like I don't play this stuff. I don't play low of the day high. Like why am I playing this? I'm trying to make money now. You guys see, like I'm not here. I'm not trading now. I'm trying to make money, right? It's not, hey, I'm looking for good setups. I want to execute on good setups. No, I'm trying to make money, which I know everyone's trying to make money in trading, but that's not how mentally we should be wired. Because when we're mentally thinking, I want to make money today, we start taking trades in terms of what it could be, right? So right on the open, when we start getting this opening drive rally for Amazon, right? Oh man, I missed it. Should have caught that. Had a setup, broke yesterday's levels, broke pre-market levels, broke my 2180 levels. We broke 22s very well. Why didn't I take this trade? Okay, we're consolidating. Look for the next move up. That's the mental game that I've established. Going at 2585, added 2030, exited 1950. Forget that. Just look at my entries. Getting on the high, we make a move down. I'm like, I add more here, and then I start slowly selling. Right away on the open, 15% down, $7,000. Like I take my last Friday's good day and I destroy it. Right. We go on to the next day. Next trade. Look at this messy, actionable trades, right? I start buying puts, thinking, oh, because we rejected and I wanted to play the upside and it didn't go up, I'm going to start playing the downside because I think we're going to start rejecting this zone and start going down. Give myself a $4,000 loss right after that. No trade setup, nothing going on at all. Like we have nothing for that day, right? Like there's like absolutely nothing. And followed by I don't even want to say a good trade, followed by a trade, right? Like I get in here, I get out. Like this is not trading. Like this is like I can't sit here, if I'm being honest, I can't sit here and say like there's, obviously I can go and say, well, guys, look, I read this perfectly. No, I didn't read shit here. Like I read nothing. Right. And that's me being honest with myself, because if I start convincing myself that, hey, I've read this so well, okay, then do it every single day. No, I didn't read anything here. This is just me throwing darts and hitting some of them because I'm trying to make money and I'm kind of on a tilt. I don't have any risk tolerance here. I don't know where I'm going to put my stop. I don't even know if I have a stop. Like I'm just like I'm hoping this goes up higher. That was it. Like there was, and look, I'm going from playing calls to puts to puts to calls to calls, like in a tight zone, right? So it's just from an honesty point, it's like, yo, what am I doing? I go calls, puts, put. Like, what am I trading here, right? And here, fine, I catch a move, but in realism, was this any move? Like, did I read that this dump was coming? No, this could have been more chop and made a move up. This is just me trading on a chop day, right? And just trying to maximize on it for apparently no reason. If this reversed, this right here would have been another 5K, 4K loss, on nothing. So I walk out that day, right? Once again, like you see, we're midway into May. It's already a mess. Like my trading is beyond a mess, right? And there's no finding consistency or anything. And now going on the other aspect of it, right? The mental part. Also, what's been going on in the back end during this time period, right? I've been working on a few things, right? Let's say Zella, the new SML relaunch, another project, and things like that, right? So a lot of my time has been eaten up by that, right? And that's not making an excuse. I'm not trying to make an excuse. I'm just trying to show you guys both sides, right? So because of that, there isn't real work being put into trading. Like I'm in a way disrespecting traders. And the reason I say that is because me, myself, I hate when traders wake up, look to trade stuff without doing the work and think they can make money. And that's what I did, right? I kind of started, not actually, but the way I'm working, I'm talking about, without doing the proper work, recapping my trades, looking at my trading performance, looking at the market, understanding moves and being patient, letting the trade, like trading like a trader, like actually going and saying, this is how I need to trade. I just started waking up to be like, okay, I got to make money today. Like, all right, let me see how can I make money today, right? And that in a way to me is disrespecting the traders that do work hard, that do put in time and effort to get better and chart and understand movements and start putting in the real work. Now when I just wake up and I open my screen to look to trade without really even putting in the extra hour at the end of the day, I'm not going to get results. So that's me being honest and saying, hey, I'm not doing that. I'm allocating my time everywhere else without allocating into my trading, right? And I can't expect to get results if I don't go at the end of the day and say, okay, like, let me read what's going on with the market. Okay, market conditions are changing. Markets are making crazy moves up and down. Let me work on how I'm thinking. I'm thinking in terms of, I'm just trying to make money. I don't care. Like, I just want, obviously everyone's trying to make money, but I also can't like disrespect the craft, right? By not putting in work, by not trying to understand the markets, not going through all of that and just waking up to make money. And that's me basically half of May, right? And it's just, just showing up every day, but showing up at 100% capacity, not showing up where you're getting in front of your computer at 9:20 a.m. and saying, okay, like I'm going to trade Amazon, I'm going to short Amazon. I've been doing X, Y, and Z with Amazon. I'll make money. It's fine. I'm cool. Blah, 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 blah. That's not how it works. And I a lot of times, like I'm hard and honest with myself on that. And I'm saying that to you guys because I'm pretty sure there's people on here that do that sometimes don't work or don't put in the work at the highest capacity and don't understand and don't set aside everything and say, hey, I need to work on this. I need to give this proper time. Like I can't come in here and half-ass it and think I'm going to make money. Like that's not what market's going to, screw me over if I think like that. And sometimes we all get there, and I got there, and that led to terrible trading, right? We go to Monday, same thing, no real good trading, followed by Wednesday. You can see a lot of inconsistency. Start off terrible trading, and look at my trades, bro. Look at my trades, guys. Not like why am I trading? Why is my first trade at 10:45? Like I shouldn't even trade this day, but I'm taking my first trade at 10:45. Like I don't trade. Like my first trade, I know this about myself, should not be at 10:45. Right? Like this is not my trades. My trades are right here. Like this is where I'm trading. Get the morning rejection, consolidation, 9:54. We get the dump. Try to read that. That's my trade, and I'm done. Right? I go back to my January trades. Most of my trades were in the first hour, right? They weren't coming in at the time period that they're coming in now. Now, last day I want to cover, and then we'll go into other aspects. This day, right? May 20th. This was a Friday as well. Same day expiration. SPX just mentally destroyed this day for, look at this, not even one good trade, right? May 20th. This day, you guys can see. Okay, so this day was actually interesting. I remember this day. This day caused me to go on a complete tilt. Okay. So this day, actually, yeah, I remember this was really interesting. So what happened is this was my chart, by the way, right? Look at this. We have this huge level at 39.45. We couldn't break yesterday's high levels. We opened up around there. And my game plan was if we reject there, I'm going to short, which is what I did. Okay, I shorted right here, right? At 9:31, I got in 20 contracts, right? At 8.80. Now, I messed up on a few things. First thing, my strike selection. Bad strike, guys. Very important to understand when you're selecting strikes, right? When you select out of the money strikes and the move goes against you, those premiums really take a big hit. So what happened is I was on the 38.80 strikes. Stock is trading around 39.40. So I'm about 60 points out on same day expiration. So you can imagine when this stock or when SPX makes a move up, you can imagine how my premiums will take a hit, right? So right away, when we start seeing rejections, we start seeing a heavy rejection here, market starts looking weak on the open, I'm like, I'm going to go in and I'm going to short. Okay. Now, a few things I could have done better. I could have picked Monday or next week expiration, right? Put myself at the money or in the money instead of going out of the money, right? That wouldn't have caused massive fluctuations when this, moved up or down. That was number one. Number two, I got too attached to looking at the premiums. No matter what, subconsciously, we are going to look at premiums, right? We're going to look at what we're up, what we're down. It's very hard to do, right? So I'll start seeing and I'll say, oh shit, we are down or we are up or we could do this or we could do that. And that ultimately will and can have an impact on us. And what happened here is when I shorted or I got inputs and this started making a move up a little bit, you guys can see candle didn't close. We just started making a move up. Mentally I panicked. I'm like, oh shit, I can't have another red day. It's a Friday. I've been right on every Friday, same expiration. Let me just kind of cut this and not take a big loss, right? And I get out next candle without it going to my stop. But because I selected out of the money contracts, my premiums were really, really, really moving against me whenever the candles would go towards the upside. And right away, I got out. Now, when I look at the overall day, you guys can see. And these premiums, the 3880 premiums, not saying that that's a thing or not. When I looked at them at the end of the day, if I just held this contract, this would have been like 100 grand. I'm not saying to think like that, but that's how we will start thinking, because it's like, oh my God, we got the weakness in the open. I read the weakness, blah, blah, blah. Right. We got that. And then right away, these contracts during this time went to like $20 just on this move. And right away, because I was in the right trade, I selected the wrong strike, right? My premiums kind of shook me out. And I was like, I'm going to exit. And I was in the right trade right away. That is a recipe for disaster for some people, including myself. And I was like, oh, fuck. Damn, if I held this trade, I could have had the first opening trade right. And it, I started the day negative 3,600, right away, negative 3,600. And that, right, is like a really big thing, because when we start having, those negative openings, they just ultimately destroy us. And look, the whole day, guys, look at this. This is the crazy part. On Friday, the whole day I played puts. The market this day tanked. The whole day I played the downside, and I'm red. Like, make sense of that. Like you're like, I'm playing puts while the whole market is dumping, and I'm still red on every trade. Like, this is like, it doesn't get worse than this in terms of tilting to an extreme point. Right. And that's just like me being like straight up, like I hit a day where market, and no matter what, the next day you show up, you're like, fuck, like, it's demotivating and it hurts, and you're like, whatever. And then I go to the next trade. Look at this next trade, right? Next trade, we go into 933. So after I get out of my first trade, I go into my next trade, I get in, and then I get out right away. So just, it's like really interesting, right? So look at this, right? So on the last trade, I got out at 932.31, 932.31, 933.12. I got back into puts, right? Because I was like, no, you're in the right trade, Omar. It's the right trade. Just get in. And look, I'm still in the bad strike selection. I didn't pick up on this right away. So when I got in and it went against me, now I went in 30 contracts instead of 20. I increased size, which I don't do and I shouldn't do. The fluctuation of premiums was hurting me, because I'm like, oh shit, because this premium went to like 650 after like a little bit fluctuation, and I couldn't handle that. So looking at the premiums and trading off my P&L, I was like, let me just exit. Not a good time. I shouldn't hold this trade. Let me just get out. And look, 40, 50 seconds later, I got out. And once again, if I held this trade right here, we got a huge move down. This itself would have paid a ton. And this, not saying that this was the move I was waiting for, but I was waiting for a rejection towards the downside. And on the second candle, I would have taken half off, or on the first candle, I would have taken half off. And this would have been my trade idea, but I messed up on both trades, right? Then we go to the next trade, right? I buy more at 934. I buy 30 more at 934, right? And this is the interesting part, right? I buy puts here. I sell here. And on the first bounce, I exit, and I still walk out being red. Where if I exited all here, I would have maybe made $3,000 on this trade. But I was anticipating a bigger move now, because I missed this move and I was in it. And, you're in just complete tilt trading. The good thing I did, I scaled half out. If I didn't scale half out, I would have like completely destroyed, my trade here. But the fact that I scaled out was a good thing. And then right away, I exit right here, because I'm like, yo, I can't like take a reversal day here. And then you go to the last trade for the day, right? I go and I buy puts again right here. I'm like, okay, I'm going to buy puts. We make a move into 39.40. I'm like, oh shit, we're about to reverse. We're about to go higher. And I sell that. And this is me just kind of showing you guys on a day where everything that you take is just wrong. Like and you like, see, this is the interesting thing about this day, right? And this is why, like, I always say it. Like, I can sit here all day and I can say, and I can talk about, hey guys, I think this is what's going to happen tomorrow. And I think we are going to sell off, or this is going to reject, all of that good stuff. Right. And that's not hard. That's not impressive to me. And it shouldn't be impressive to anyone. What the hard part in trading is, and I'm pretty sure the people that have been trading for some time can relate, is when you can execute and manage that position, right? And execute that game plan and be adaptable to when the market does not go perfect to your game plan. You guys follow, right? So this day, my game plan originally was, if we see rejection here, I am going to play the downside, which is what we got. Bad strike selection, letting my P&L kind of shake me out, trading on tilt. I traded all puts. I traded the downside here. Like just once again, make sense of that, right? I played the downside here and I lost money. Like that is absurd, but that happens. And that's happened with me a few times. And it sucks, but it's the reality of trading. Like I wish I could say this is the only time this has happened. Like, no, this has happened to me in multiple times, multiple days in my trading, like even last year, and it's just like, now it's, I want to go deeper into it to show, I guess, people like, hey, like these days, not that they're normal and they're okay to have, they're not okay to have, but when they happen, now how do we kind of reassess that to not blow up our account, to stay alive? Like, so far, like I said, I haven't been trading well, but my first 2 months have been kind of carrying me in terms of being green, right? But it's not been great trading. Now we go on to Monday, May 23rd, right? Same thing. Opened the day down 2,900. Oh my God. Like mentally, shit, I can't seem to catch a break. I remake that up with the trade, close the day. Like, look, after these trades, shouldn't have traded. Even though this kind of saved me for the day, shouldn't have traded. We go on to Tuesday, take a quick trade. I'm very hesitant now. I'm really scared. And guys, you know what the crazy part? Look at my trades, right? Just it's very interesting because when you look at these trades, you'll start seeing like the trade ideas on some of these trades are great. Like, I'm playing the downside here, right? At 9:45, I'm like, hey, I'm going to buy puts, and the right trade idea. The market dumped. Market kind of worked alongside the game plan I had. Could have done very well on this trade. Obviously, went with the proper size and so on. But on a little bit green, I took profits. I was like, I'm taking my profits on this. These contracts, I think, went to like $5, right? I took profits. Why? Because I'm not used to seeing green now, right? I'm in that mind state of like, oh shit, like take the green, build your trading back up. And then what happens with this on a day where this could have been a 6 or a 10K day, let's just say hypothetically, because I had the right game plan, just wasn't the trade, I got shook out by seeing a little bit green. Now when trades do go against me, right, I am unable to capitalize on them in the right way, right? So we go here and I'm playing calls. Like, I'm buying contracts right at the top, right? And I'm buying calls, and on any push down or any reaction, I can obviously, hold on to that, and I start taking a loss. Now, when I go through, most of my trades and I start looking at it in terms of performance wise for this month, right? And I just want to share a little bit of like January, just in terms of context, right? Here we go. So in January, I had a lot of trades like 9R, 5R, 3.5R, 2R. You look 112%, 54%, 66%, 62%. Look at these percentage gains, right? Like, my biggest loss in January was negative 27%, right? And I'm okay with that, right? I knew the risk. I put about 8K in risk. The setup here was terrible, but overall, like, most of my trades for that month really, really lined up well, right? You go to, let's just say, this Amazon trade. I went in with 54K, right? This was like the same setup, guys. Look, on the opening, you get the little bounce, you get the morning rejection. I didn't set this up. Where is it? Blowing top. Here you go. You open, you see the rejection around 30.20, and you start shorting. Now look at this. This is a prime example of a good trade, right? I get in at 30 contracts at 18.25, right? 9.34 right here on this rejection. Got in at a great entry, right? I go in, I short 3,000. My strike is at 3,000. So I'm at the right point. I short that. And then right when we start moving, I'm not taking a little bit green. My thing here is we get the first move up and we start seeing the dump. And as we start moving down, 938 at $36, I scale 10 off, right? And then 943 right here, when we do start bottoming, or I think we start bottoming, I take the other 20 off. One point, I was up 75 grand on this position, closed the position 61,000, which I'm okay with. Obviously, if I held this all the way, it would have made 100 and some thousand. This is what I'm looking for, right? This is, to me, clean trading. This is it. Like, I take this trade in the open, I'm good. 61K, I'll take it, right? Great trade, great execution. Obviously, it was a Friday. If it wasn't Friday, I would have made 112,000, maybe 30%, maybe 40%, maybe even 20%, depending on, my strike selection, things like that. So all of those things really, really matter, right? So this is what I'm talking about in terms of, having a high quality setup. But now when I go to this month, right, there's not a single trade that, aligns to anything close to that. Right? Like I'm playing high of the day, like even my trades, morning rejection, right? Look at this. Same thing, right? We get the morning rejection right here. I'm not capitalizing on all the way. On the second bounce here at 40.20, we get the SPX level, another short play. Like there's setups that I'm having that. I'm seeing the setups, right? But I'm not able to capitalize on them on the highest level, right? So even if I go and let's just say some issues I've been having and some trades that I need to work on, right? In terms of just time, right? I just want to break this down, right? For this whole month, right? Let's just break it down in a month. Look at this. I'm by 10 a.m. I'm blowing all my money. Like I'm making money on the open, which is my trading time, right? I do well on the open. That's it. But everything afterwards, I'm just burning through money for apparently no reason. You look at my trade duration, I'm doing good, but now I start holding my losers for a really, really long period of time, right? They're ultimately destroying me, right? Setups like low of the day. I'm playing low of the day. I'm playing high of the, like, that's not the way I trade. You go to my January, guys, I have no low of the day, high of the day crap, right? Like that's not how I trade. Forget it being anything. I have opening drive, I have a bid hold, blowing top, morning bounce. You go to a blowing top. I have great good setups that are presented here. I'm not going in terms of looking at what trade setup do I have, what performance setup do I have. Like it's actual really solid trades. Like I have a morning bounce play. 3 trades on that, 20%, 11%, 17%, 3R, 2R, 2.5, 2.8R, right? About 3R, average 2.5R on all 3 trades. You look at all of them, right? They're giving us similar setups. And I'm capitalizing on that over and over again. That's called, in my opinion, good trading, right? But then when we kind of go against that, that's when things start, being a big issue, right? Even if I go into some of my mistakes that I've kind of filtered out and just, and this is also a section that we're going to work really, really well on to build in terms of navigating your mistakes and stuff. I had a few trades with bad fills, right? Early entry. My entries have been really, really early. I tilt traded a few times. I got trapped multiple times. Bad strike, right? That happened 2-3 times, right? I have this 4 times about. So there's tons and tons of issues that are going through, right? So now when I go in my R multiple too for the month of May, I have, look at this. I have 3 trades between 1 to 3R, right? I made about 13 grand, right? But when I look at the overall of this month, I have one trade that was a negative 4R that lost me 21,000. I had another one that lost me negative 3R to 4R. And then another one that above, like this is just representing, like when I start seeing losers here, right? Anything above 1R, that means I didn't respect my stop. That allocated, for me to have tons of problems, right? My position size, right? Look, 56 grand and over. Like why don't I have a medium for this month? Why is my position sizing all over the place? Why can't I have a medium? Why don't I have a medium? You know what I mean? In terms of my position sizing, right? So, okay. So now obviously what I recommend you guys to do, and this is where we have the follow-up webinar and I want to talk about a few things. So every trade you guys have, tag it, what setup it was. If it wasn't a setup, just say no setup. I didn't have a setup, right? If I go once again to my detailed reports, I look at my setups. I had a few trades with no setups for more than 4, maybe like 10, 12. Understand those setups. What setups did well? What setups didn't do well? Were there actually good setups? What mistakes did you make on every trade? Right? You are going to have mistakes. Let's try to find those patterns. Now, what I need to do right now is, so if you guys have or haven't, on sessions recap, you can log a period. For example, May 1st to May 31st. It'll give you like your whole stat for that period, right? So this is my stat for May. Now, what I'm going to do, like tonight, I haven't done that yet. I'm going to write out everything about my trading, right? So some things, writing some things out could go into like, hey, what did I do well? What do I need to work on going into June? So I haven't taken a trade into June yet, right? Going into June, what is my focus point? What setups am I going to cut out, right? A lot high, the low of the day, I'm not trading that crap. I don't care if it's the best setup, I'm not trading that. Then understanding what the market did. But how has the market been moving, right? The market has been having crazy swings where we start dumping on the open to now picking up super, super high, right? We start making these crazy movements that are causing fluctuations in the market. What are issues that you're having a hard time with, right? I see a little bit green and I'm taking the trade from there, right? Writing that out, understanding that, and then moving forward to this week, like for example, this upcoming week, what are 3 setups am I going to focus on? And just limiting myself to those 3 setups, right? Like this month, I traded tons and tons of stupid setups. Then what is besides those 3 setups? What in terms of trades will I focus on? I'm only allowed to trade 2, maximum 3 times a day. Like I'm not allowing myself to trade more than 2, 3 times a day. And in the first open, 1 to 2 times. I don't care if I'm green. I don't care if I'm red. I need to be done with that. Right. So like doing those things in terms of the to do things that you have to do in terms of improving yourself. And then at the same time, what names am I going to focus on? Right. What was my game plan? Right. A lot of times I, realistically did not put in the right work. I did not chart. I did not look at the market. I did not have a proper game plan. Like a lot of my trading in May was just was super sloppy. I was just trying to make money. And that's me being super honest with that. Now it goes into letting the 27K, 28K go, right? I need to let that go. I need to not start like I need to make money. I need to let that go. I mean, I need to recoup that loss. I need to be able to make up for that and just go and trade with a certain size and keep that size consistent. Don't go over, don't go under. And after I perform well, let's just say this week, then allow myself the following week to adjust the next mistakes, right? So whatever mistakes that you make this week or you make next week, be able to allow yourself to go on to the following week to be like, okay, these are things I need to work on. These are things I need to improve. These are things that I did well, I didn't do well on, and kind of take it from there, right? So like I said, on Tuesday, we will have a webinar at 6 p.m. It'll be a Q&A webinar for, any questions you guys have for the month of May or for your trading or the previous months, situations that, you have questions about or you're having to struggle with. You can post in the Q&A box if you are unable to make it. And if not, if anyone joined late on this webinar, this is recorded and I will be posting it in probably the next 20, maybe 30 minutes. With that being said, I hope you guys had a great weekend and thank you for hopping on, guys. Appreciate you guys.